The Dow broke 50,000 and $1.2 trillion was added to the US stock market on Friday. Trump said it's going to double by the end of his term. But insiders are selling and hedge funds are shorting the most on record. The market is at peak uncertainty with Iran as an attack and nuclear deal are simultaneously on the table. Jobs and critical inflation data is also about to hit the wire. Today, we cover why the market's rising, what to know, and where the action is at right now.
As we can see, the market was overwhelmingly green to end last week as $1.2 trillion was added to the market on Friday. NVIDIA and AVGO led the way, and we can see NVIDIA was up 8.39% as Jensen Huang, the CEO, sparked the rally, saying that demand is through the roof and that the $660 billion CapEx build-out is sustainable. This is important because the whole reason the market was freaking out last week was because of AI fears and CapEx unsustainability, and not even the Mag 7 players were immune from that. We saw stocks like Microsoft and Amazon tanking last week. Now, Trump even just came out and said the Dow crossed 50K, but he predicted that it'll double to 100K by the end of his term. That is a pretty big statement from the President of the United States, and that should make bull traders very happy going into February.
But Wall Street's major players seem to disagree. We can see when we look at Goldman Sachs prime book data, it shows that hedge funds actually added the largest volume of short positions last week, making it the biggest single week of shorting on record. The last time we saw anything like this was in June 2022, when hedge funds shorted so much after the Fed hiked rates by 0.75%.
Yeah, and we can see in the shorter term, markets were volatile, but ultimately ended up rising a few months later throughout 2023 into 2024. But there was definitely some volatility in the short term. And in the shorter term, insider selling is also on the rise. There was an overwhelming amount of insider selling last week. Now, depending on what flows you look at, 97 to 100% of the significant insider trading last week were sells. It says a lot when people with the most information in the stock market are not touching it right now. And I think that that's been something that has been maybe causing a lot of the selling pressure with SPY lately. If we look at the SPY on like a 1 hour chart here, we can see that it has been very volatile. But on Friday, we did get that really good recovery and move back to the upside. Something that we've been watching for, Mike, is this broader uptrend with the SPY. The SPY has been in a broader uptrend for a long time now as it's been continuing to push to new highs, but every time it makes a new high, it pulls back. And we saw that happen again recently. A new high was made and the SPY pulled back, but we're now holding that trend. And instead of continuing to the downside at the end of last week, we got that great bounce back. Right now, the SPY is only 1.12% away from the all-time high, which is at 698.34. If we end up getting towards that this week, watch for a potential breakout. I really like the high of day Friday, right around 692.30 to 692. That's going to be a big range that I watch for. We need to really break through that because the recovery move on Friday was very exponential, and we saw a great pop out of the market. Sometimes after we see huge pops like that, there can be some consolidation or maybe 1 or 2 days of redness before the uptrend continues. But I really like going back, Mike, and looking at this broader uptrend because it really supports that there could be some buying pressure up to the new high. Like there's a lot of cases lately where SPY will come up off the dip and move for multiple days in a row.
And it's great to keep in mind that we're still only 1.12% away from all-time highs. 676 was a pretty big support level from last week. It was that low on the daily chart, and there was that after hours low as well, right around 671. I would say these are the most important support levels to keep in mind in the short term. So let's keep these close on watch. But overall, it's great to see this recovery. And we also have some fun Super Bowl stats for everyone today. We can see in the past, whenever there's been a 21-point blowout or more, the S&P 500 has done pretty well. But of course, take stats like this with a grain of salt.
Yeah, it's really fun to look at stats like this. Of course, the market does not have to move based off of how the Super Bowl performs. But hey, if you're into the Super Bowl, let us know who you think's going to win down below. If you're not into it, then hey, that's your thing. But I find these stats pretty interesting. Every year the Super Bowl comes up, we do see some pretty fun stat in this sense. Just remember that, take it with a grain of salt, like Mike said. But Mike, whenever we're talking about the market this week, there are some big events coming up besides the Super Bowl. So Tuesday, 1 hour before open, we have retail sales coming out. But even more important than that, on Wednesday, we're going to be getting jobs data. We're going to be getting the non-farm payrolls and the unemployment rate coming out 1 hour before open. Just last week, U.S. job openings and layoffs were at 2009 recession levels. And again, this data is going to be coming out Wednesday before open. So it's going to be very big data. This could move the market in a major way. At the same time, on Friday, we are going to be having CPI data release as well. Inflation data is set to come out 1 hour before open on Friday. So 2 huge days this week as far as data is concerned.
And we have a lot going on geopolitically as well. The nuclear talks between the U.S. and Iran remain in a state of a max uncertainty, and betting markets agree. We can see that there's a 47% chance that the U.S. strikes a nuclear deal with Iran before 2027, but there's also a 51% chance of the U.S. actually striking Iran by June 30th. So, this is peak uncertainty here. The White House also just urged U.S. citizens to leave the country and signed a new executive order allowing the U.S. to impose additional 25% tariffs on any country doing business with Iran.
And at the same time, there's even 112 U.S. Air Force aircraft that have arrived in the Middle East over this past weekend between February 5th and February 7th. That is a huge amount of aircraft. Again, this is a time of peak uncertainty right now regarding the Iran situation and the geopolitical news. If something pops off, it could end up moving markets. So keep this on your radar this week. It will be extremely important. But another thing to keep on the radar, Mike, is the insane earnings that are going on. Now, we're not going to see as many Mag 7 players report this week, but I got to say, there are some fun reports coming out. Whether you're looking at Datadog, Spotify, even Coca-Cola has been popping off in the short term. Robinhood on Tuesday, Coinbase on Thursday, Moderna Friday. There is no shortage of big movers here.
Love to see it. And jumping into some setups and predictions, a stock that's specifically on my radar this week is ticker symbol MSTR. Strategy has been hit very hard, especially over the past couple of years, and as Bitcoin has dropped lower. We can see on Friday alone, it popped up by 26% as crypto recovered. This is on my radar because we saw a big shift in market sentiment on Friday where Jensen basically eased fears of the AI CapEx spending and the AI bubble and everything like that, and definitely got the buying pressure back up again. And this extended into everything, whether it's tech stocks, crypto, or basically anything else. So if we continue to see this narrative develop, I would not be surprised to see crypto recovery and also MSTR. Of course, crypto is volatile, as is MSTR, but I think it offers a good risk reward if a tight stop loss is used, where like we've seen in the past with MSTR recoveries, it can have 100-point plus swings. Again, it's on my radar, but I want to see continuous pressure on recent highs.
Yeah, there have been some great swings with MSTR. I'll be watching these crypto stocks like a hawk because I feel like that they've gotten extremely oversold to the point where shorts might even start covering as we see maybe this dip pop up a little bit. So I find it very interesting too, Mike. I will watch it very closely. With my first setup of the day, I'm looking at Applied Digital, ticker symbol APLD. This stock popped up 25% on Friday. If we look at the daily, APLD has been all over the place, but for the most part, it's held closer to the highs in its broader zone. We didn't really get back to that low of $19 to $20 here on this dip. Instead, we're actually holding a major trend line that APLD has held multiple times here in the past. So I'm going to continue to watch this stock for a bounce off of this trend line and even off of this wedge for a possible breakout tomorrow. I'll be looking for the high of day from Friday, close to $35 to break. If we can get a clear move through 35, even 35.10 technically at that high of day, then I will be watching for that breakout to continue. That's a lot of momentum, Mike, 25% in one trading day. And we saw a bunch of momentum come into a lot of I would say just stocks that have been pulling back or selling off recently.
Definitely. And APLD has hit a great 2025 and 2026 so far. So let's keep it close on watch. Another stock that's on the radar is Walmart, and it's also to the upside. I know this is like more of a boring company, but it can offer some really good risk reward. We've also been seeing a lot of money flow into like value and safe haven stocks over the past couple of weeks and over like the past like month or so. Walmart has been pushing recent highs, and its price action has been very bullish. It's on my radar for a potential continuation, kind of like what we saw with ExxonMobil over the past few weeks. Ever since Trump captured Maduro and kind of pushed to revive the Venezuelan oil industry, oil stocks have done very well, but especially ExxonMobil. Of course, there's a big catalyst driving that move, but it's also more of a boring, slower like boring company, kind of like Walmart is, and value stocks tend to like move in this type of way rather than, you know, having 20% up and down swings like stocks like APLD or MSTR. So Walmart is on my bullish radar for a multi-day to multi-week continuation, kind of like what ExxonMobil had. In the worst case scenario where it starts to pull back, then let's keep those stops tight and live on for the next trade.
The rotation into the value stock seems to still be playing out even as of Friday, with Walmart rising up 3.34%. That was quite the move. I'll be watching it close, Mike. I've been watching these stocks like a hawk as well. With my next play, I'm looking at AMD. So AMD had a good recovery Friday. Now, they actually gapped down with earnings last week. It was another one of the bad earnings movers and ended up impacting the overall semiconductor industry in a pretty good way when they dropped. But as we can see on Friday, they're up 8.28%. And what I'm looking for is a bit of an earnings recovery here. There's now a huge gap to fill on the chart here, up to around $240 to $237. And I'll be watching for that gap to eventually fill. Now, what we're looking for in the ultra short term, though, is a move above 210. This is a very big area of resistance that I'm watching for. And if we go to the Bookmap here, you can see that on AMD, there are no huge sell walls besides 210. You can go up to 220 where there's 23,000 shares stacked up, but you look at 209 with 22,000, 210 with 55,000 shares. There is a clear wall right here. And that wall is also supported on the chart itself. I mean, that's right where AMD really failed to break out above on Friday. So if we're able to break out and continue this uptrend, I'll be watching for AMD to keep recovering. I love that chip stock recovery Friday. I love the way the overall market recovered too, and we could keep that momentum going into this week.
Sounds good. I'm going to have a close eye on that 210 level. Shout out Bookmap as well. If you guys haven't tried it out, definitely check it out. It's super useful. But let's jump right into today's momentum plays. And with the first one, we have Oklo, ticker symbol OKLO, to the upside.
Up over 14% Friday. If Oklo can break out above 72.35, watch for the continuation.
With the next one, we have Bitmine, ticker symbol BMNR, also to the upside.
Another crypto stock, Mike. If BMNR can break above 2110, watch it up. This stock moves a lot with Ethereum.
And then with the last one, we have Alphabet, ticker symbol GOOGL, to the downside.
Google was pretty weak Friday, even with the overall market recovery. Maybe their earnings were playing a bit of a role, but if they end up breaking down under 320 even, then watch them down.
Sounds good. So we have these three stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. These stocks are volatile, so as always, you need to protect yourself. Have stop losses. Only risk an amount you're comfortable losing, and focus on making smart, disciplined trading decisions. If you need help with that, check out the StockedUp Discord. It's completely free. And besides that, let's jump right into today's big money trade. Today, we're looking at a $4.5 million trade with ticker symbol IGV. The trader bought the 84 strike call options that expire on January 15th of 2027. This is a super interesting trade because this is the iShares software ETF, which has been one of the hardest hit areas of the market lately due to everyone freaking out about the recent AI fears. We can see it's down a lot from highs. The trader here is basically positioning themselves to benefit off of this like mega dip buy. These call options are slightly out of the money and they have a lot of time to them, and this is a pretty big dip.
Yeah, the 84 strike calls are fairly close to the money, and whenever I look at IGV, it got close to a huge zone of support. If we look at the low of 2025 for IGV and even go out to 2024, this zone of support has been critical. Every time that IGV has hit this, it has popped up in a significant way, with some of these shorter pops rising 16%, but with some of the larger pops getting more towards 45, if not even well above, closer to 55%. So I really like the support zone for IGV. I could see it holding up here. Now, if we do see IGV, let's say turn over the next few months, it starts to really break support, it might be tough for me to hold on to this trade. But for a lot of traders out there, looking at maybe some of these stocks, like let's just say Adobe or other software stocks that have been getting hit very hard in the short term, this could maybe be a better option for you. It's an ETF. It has a lot of those companies in there. And again, if we do see that uptrend, the option should perform very well, given that it's right around the money. There's a lot of money in it too. So I could see this one doing very well. And with IGV, like I said, it's popped up very well from these lows. If we get another like 15 to 17% pop from the recent low, that would put this stock right around $90 to $92, which is a pretty good range given this current strike price of this play.
Love to see it. Either way, let's keep this one close on the radar. Should be interesting. And if you guys are new to the channel, welcome, and consider obliterating that subscribe button. For every single trading day, we make brand new videos just like this one, showcasing multi-million-dollar big money trades, SPY levels and analysis, stocks to keep on the radar, upcoming events, earnings, information, and everything you need to know and more about the market. It takes us a long time to make these videos, and if you subscribe, you'll get them recommended to you more often. So definitely consider doing that. But let's also give a giant shout out to today's member of the day, TTV in the StockedUp Discord, who had a great day on Friday. Huge shout out to you. He had a little bit over $1,100 in gains and grew his account by roughly 13%. So keep up the great work going forward. It is awesome to see posts like this one. And again, if you guys are into short-term trading, check out Bookmap. It's like the X-ray vision for trading. Basically, you can see where larger traders have their buy and sell orders stacked up at, which can act as key pivotal levels for the stock's movement. You can also save quite a bit if you use the link in the description in the comments down below, so check it out. But besides that, thank you so much for watching, and let's crush it in the market tomorrow.